Good evening, everyone, and welcome. Some people think the great war on inflation, begun more than 30 years ago by Fed Chief Paul Volcker, has long since been won. But every now and then, like today, comes news that calls that victory into question, at least until the next number comes out. The Consumer Price Index rose 0.4% in May, twice what economists expected, and the largest increase in more than a year, with prices for gasoline, food, clothing, and just about everything else moving higher last month. A little inflation is not necessarily a bad thing. The Yellen Fed, after all, thinks the Goldilocks number for the CPI is 2%. Today's figure, annualized, is well above that, of course. So how will the Fed process that number as it begins a two-day rate-setting meeting today? Steve Leisman examines.
Inflation in the United States, remarkable for how low it's been for so long, surprised to the upside in May. Immediate concerns turn to the impact of higher prices on consumers and on whether the Federal Reserve could be forced to raise interest rates sooner than markets expect. Inflation in May rising 0.4%, the biggest monthly jump in a year and 0.2 above Wall Street's expectations. It was the fourth straight rise in the yearly rate, and for the first time since February 2013, both the core inflation rate, which excludes food and energy, and the headline rate, which includes everything, are at or above 2%. Now, that's close to what the Fed has been aiming for, but market participants quickly began to worry. What if prices keep rising beyond the Fed's target?
They've talked that they want inflation higher, but how much higher? And is above 2% bad, or is above 2% okay for some period of time? They've been very unclear as to their goals with regard to inflation, and those goals are, then unclear to people who are trying to figure out the timing of the rate hike cycle.
Part of the concern is that price gains were broad-based. Airline fares grew an outsized 5.8% on the month. Home utility costs up nearly 1%. And prescription drug, food, and gasoline prices all surged. Economist Diane Swonk at Mesirow Financial writing, quote, with stagnant wages in the U.S., those price increases will act as a direct tax on consumers and curtail spending if they persist. The Fed began a two-day meeting on Tuesday, and it has generally pledged to keep interest rates low while trying to raise inflation. But Fed Chair Janet Yellen is sure to be quizzed on inflation at her press conference, and the question is whether she and the Fed have thought through what happens to interest rates and the economy if inflation rises faster and higher than everyone expects. For Nightly Business Report, I'm Steve Leisman.